Let's see who the first one in the stream is. We're just going to give everyone a minute to join before we start. What's up to everyone listening in post-stream? We'll be starting in a minute. Just dropping the link into the chat. It looks like Dan C is already on it, is already first, so he is the first one on the board on the bonus raffle tickets. What's going on, Dan C, Joshua, Durham Dad, Janaea, what's going on? Nikki, how's it going? Make sure the chat box, there it is working. And as you see, Dan C was first, so he got some bonus raffle tickets. Congratulations, Dan C. Janaea, Nikki, Josh, what's going on? What's up, Oliver? Give everyone 30 more seconds to join, and then we'll get started. So today we'll be going over the homework for the past two classes. So that's going to be the homework for class number 7 and 8, our last two classes on trading psychology. Hope that y'all enjoyed our trading psychology courses. Next week is going to be, we're going to be going over trading strategies. And I have the syllabus to that listed in the PBU class area. So yeah, next week we'll be going over some trading terms. We'll be going over Investopedia and how that works, as well as investing.com. Some other sites. We'll be going over Webull and Robinhood in detail. We'll go over how to find float, or what floats are, how to find your financials, your halts and your splits, and what different websites you can use for that. We'll be going over FinViz, a bunch of different scanners that you can use. There's different scans that you can go through. Portfolio diversification, risk-reward ratio, and then of course we'll be creating your own PBU trading plan. We'll be giving out a little spreadsheet, a blank spreadsheet that you guys can use to make your plan, and we'll be going over note-taking and adjusting your plan. And then next, after that, we'll be going over charting. We'll go over all the everything from moving averages to VWAP to RSI to even some of the more complicated ones. So that definitely should be some fun classes. Let's get right into the stream. So let's go over the homework. So remember, we will be giving out bonus raffle tickets throughout the stream. Those are going to be one apiece, but we're giving out tickets to those who got 100% on the homework. So this is from the first homework of the week. So congratulations to Nick 2086, Dan C, Big Daddy NHM, Imagine Ching, Shax, Booster, D-Miles, TNT, Derelicts, Candy Diet, Big Mike, Durham Dad, Ancient Penguin, The Dude, Wolf, Janaea, Beer Drinker, No Whammies, Investing Noob, Four Finger, Sushi, Scrotus McDingle, J Malak, Casual Pete, LL, Nikki, Jaxley, Kika, Laloff, Pierman, The Dutch, Acecom, Ebon, J Cal, and Hell Pacha. So a lot of people got 100. These ones were only worth one ticket for getting 100 because there's only 3 questions in there. And then let's go over all the other questions from that homework. These also had some questions in there that were kind of based towards your own personality, your own trading. So those ones are not part of being graded, but we'll also be going over them. What's going on, Travis Pierce? Okay, so I'm just going to pull up the homework. The first question, and these are the multiple choice ones that we did go over for the 100% grade. We have, what is a vast thinker? And a vast thinker is either someone who can think on their toes, someone who can see the big picture, or someone who trades without emotions. The correct answer, which 95% of the class got, was someone who sees the big picture. So a vast thinker kind of sees, they're more of like, no, I'm going to say a slow thinker. but they're the opposite of a fast thinker. Fast thinker is someone who thinks on his toes, is maybe better at day trading, whereas a fast thinker is someone who kind of plays the long game, and they might be a little more equipped for longer swings or beaten down swings. The next question is biographical variables are, and the correct answer, 95% of the class got correct, is where you come from and what you've done and experienced. So one big way of finding out your personality is by kind of figuring out where you come from, why you might do, what makes you tick, and that is your biographical variables, which is good to kind of be aware of when trying to do your personality evaluation for what kind of trader you might be or what kind of trading you must be best at. Next question is, if you are a fast thinker, you might be best at either day trading or long-term investing. Correct answer, 98% of the class got this correct, was day trading. If you can think fast, if you think on your toes, day trading might be best for you. People who kind of get overwhelmed or anxious when they see everything moving all at once, they might be more of a vast thinker, more well equipped towards either the retirement plays or longer swings. And then these next couple questions are more so just based off of who you are personally. So at your job or hobby, do you tend to have to think on your toes, or do you have time to see the big picture while doing your job? The majority said both, because there is, it's possible to have to do both at the same time, be vast and fast thinking. 7% said think on your toes, and the 9% said B, which is see the big picture. So it looks like most people here kind of said a mix of both, and even the A and B were kind of on the 8% and 9% kind of similar. So as far as people's jobs goes, it seems like the majority of the class kind of does a little bit of fast and vast thinking. So do you get flustered easily? Either yes, no, or depends on how I'm feeling that day. 50% said depends on how I'm feeling that day, whereas 33% said no. So it seems like most of the class is pretty decent when it comes to not being flustered unless you're feeling emotional. So if you get flustered easily, day trading might be hard for you, because you make one bad day trade, you might get flustered, it might affect your trading. And also other people said depends on how I'm feeling that day. So it's always good to kind of be aware of how you are feeling during the trading day. If you're not feeling 100%, not feeling, you might feel like there's something going on that might make you be an emotional trader. Well, then it's good to take a break, or at least just be aware, take a step back. Do you consider yourself creative? 62% said yes, and 33% said a little bit. Less than 1% said no. So it seems like we have a lot of creative people in the class. Creativity is also kind of linked towards originality. And, if you're creative, you're original, it might mean that you see things that other people don't. And in trading in general, but especially swing trading, that's a very good trait to have, because you can kind of see what a setup is looking like before others can see, or if you kind of look at the charts a little bit differently than everyone else, that that might give you the edge. Next question, does your schedule make it hard for you to watch the charts? Most people actually it was a mix. 21% said yes, 26% said no, and 52% said depends on what day it is. So congratulations on the green day, Joshua. So so it does seem like, I guess depends on the day, so that might mean, base your plan accordingly. If you can't watch the charts all day, maybe try to day trade only on, Monday, Tuesday, whatever days you can watch the charts, and then stick to swing trading. So use your margin account during the days that you can't watch it, and then use your cash account for day trading when you have time. Do you read the directions before playing a video game, or just a game in general? 50% said yes, 42% said sometimes, and then 7% said no. I know myself, a lot of people, for instance, they they get a new video game and they get a new board game, and especially the video games, instead of reading the directions or doing the tutorial, they want to jump right in because they might get bored trying to learn how to do it. With trading, it is good to take it slow, especially if you're learning. But and B, it's also, if you are kind of like the one that wants to jump right into it, you might not, maybe you're not patient, so maybe long swings or retirement plays might be hard for you to to buy in slow and keep your cool. Do you get anxious when you have to wait in a long line or in traffic? 20. I thought everyone was going to say yes, honestly, but only 28% said yes. 40% said sometimes, and 31% 31% said yes, and 28% said no. Sorry. So, yeah, I thought everyone was going to say yes. I personally, I hate waiting in traffic. So if you are like me, if you kind of get anxious, kind of trying to be patient in a line or in traffic, kind of put that towards your evaluation as far as day trading or swing trading goes. Do you consider yourself as a confident person? This was right down the line, 50-50. 50% said yes, and 50% said depends on what I'm doing. So that's good that you guys are pretty confident. That definitely helps with trading, because if you're not confident, you can feel fearful, and if you're fearful, you might be too afraid to get into a good trade, and then you might watch it run, and then you might get FOMO because you were fearful. So, but there is a fine line between being fearful and being careful, because you definitely do want to be careful, but you don't want to be overcautious. You want to find that line right in between overcautious and cautious enough. And just like I'll drive an extra 10 to 20 miles to get out of traffic. When you're bored, do you tend to try to force trades? 62% said no. That's a good thing. 31% said sometimes. So yeah, when you're bored and you're like you haven't found a good trade and no setups happened, and like you might be feeling like, oh, I didn't make any money today, and you see other people in the chat rooms who are like talking about how they made money, you start to feel FOMO and you're bored. So you're like, you know what, you go into the Webull top gainers list and you pick a random, you look at the top 4 stocks and you're like, this one looks like it might go back up, I might make some money off of it. What you're doing is you're chasing, but you're doing that because you're bored and you're trying to force a trade. So it's good to try to realize when you're feeling bored in the day, maybe just go for a while, maybe do something else, and don't try to force anything. So that's how you end up chasing. That's how you end up making money. That's how you end up losing money. That's how you end up getting FOMO. Do you try to make your money back by forcing trades and when you're losing on the day? And 50% said no, I take a break. And the rest said either yes or I try to, but sometimes I do end up forcing the trade. So I try not to, but sometimes I do end up forcing the trade. So that's 50-50 right down the line. It is important to realize that, if you're losing money on the day, you might feel a certain way, you might get an emotion, and you might end up making a bad trade because of that, because you're trying to make your money back. Don't let losses, don't get too many wins, let you get cocky, but don't let losses make you, force your way into trades or jump into trades when you maybe shouldn't be, and because that's kind of another way of, that's like the opposite of FOMO. It's the fear of losing money, which is loss aversion. So make sure you're making a trade based off of your plan. And the stock doesn't owe you any money. The stock doesn't care that you lost money on it. Like, just because you lost money doesn't mean you're going to make it back on that stock, nor does it mean that you have to try to. So those are the questions that all these people got 100% for. So they got raffle tickets. Let's quickly do a bonus question for bonus raffle tickets. The question is going to be, and the first 3 people to get this correct, it's going to be the same answer, but I know some people type faster than others. So, using our bots, how would you look up the alert for the stock SPAQ, and what channel would you do this in for looking at the entry target and when it was alerted? What would you type in order to do that, and where would you type it? And also make sure to include your Discord after you post it, so I know who you are and where to get the tickets to. Close that window. So where would you type this, and how would you look at the alert for the target entries and all that for SPAQ? Looks like we got some answers. Dan C says OA. So yep, so Dan C. I know you just forgot the T in StockBot, but I know what you meant. Let's see who else got this. AlertBot, SPAQ. Yep, that's Big Daddy. NNPH. NHN. Wow. Yep, and boosted. All right, you three were the first three, and it looks like you all got it right off the bat. Perfect. So you go to stock to alertbot info, and you would type in !point OA, make sure the comma, followed by the alert, SPAQ. So, congratulations to you three, Dan C, Big Daddy, and Boosted, getting those extra raffle tickets. Alright. So these are the 3 questions from that exact homework. And these are the top 3 answers that get 5 raffle tickets. The question is, do you consider yourself an emotional trader? Why or why not? How can you work on this? How have you been working on it in the past? So JCal2592 says, not really. Can't let emotions hurt your trading. I have stayed away from options for the most part. They can have you high or low, focusing on the small steady profits. I don't take alerts all the way to target sometimes to secure 10% versus aiming for 25% or whatever is alerted. So good job, JCal, 100% there. The big thing he said there was he stays away from options. Some people just realize that options might not be best for them, at least while they're still learning the stocks in general. Options are very risky. You can lose a lot of money with options. So sometimes it's best just to stay away from them. Learn about the charts, learn about everything else first, and then get to options. I know a lot of great stock traders who don't even bother with options yet. So that's a good thing to be aware of, JCal. And it's always good to take profits when you can. The targets are recommendations, but the target where you take money is based off of your trading plan. So Kika says, yes, I definitely am, especially when I'm down in my trades. I want to make up for what I lost and want to make it quickly, which usually leads to disaster. I've been trying to learn to accept a loss before I even make a trade. What amount will I be okay with losing? How much money do I want to put into the stock? If I'm down, I'll take a few minutes away, if possible, and then come back and reevaluate and reassess. 100%. 100% right there. It's really important to learn just to accept that you will lose, and you need to be aware of how much you're going to be okay with losing before you get into the trade. So how much money are you going to be putting into that stock? You have to know that before you get into the trade. So good job for that, Kika. And it's also important to know when to step away. Just like with anything, like if you're in an argument with your significant other, sometimes it's best just to step away for 15 minutes and regroup. Otherwise, you might make an emotional decision. Same thing works in stock trading, except you won't get yelled at back by the stock. You'll just lose money. Scrotus McDingle says, I would not consider myself an emotional trader, but have let emotions take control in the past. I've been working on this by using the things we've gone over here regarding trading psychology, specifically knowing when to walk away, not just taking or forcing a trade out of boredom or revenge. Yeah, revenge trading is also another emotion that can be very dangerous. That's when you lose money in a stock and you're like, I need to make that money back, and I'm going to do it with this stock. Like, that stock owes me money. It's like, that stock doesn't care. It doesn't care that you lost money. That's like when you're walking around and you bump your shin into a table. You can't get. What's the point of getting mad at the table? The table was just sitting there. It didn't do anything. It's just doing its job. And what are you gonna do? You're gonna punch the table? What's that? That doesn't hurt the table. All that does is it hurts your hand, and it might break the table you had to buy a new table for. So revenge trading is like hitting your shin on a table and then trying to punch the table. Like, doesn't really get you anywhere. It's just letting your emotions out. You shouldn't be letting your emotions out in the stock market because you're using your hard-earned money. So yeah, good job to you three. Get 5 raffle tickets each. Now we'll be moving on. Let's do another bonus question before we get into that. Next question is, top 3 answers, doesn't matter who's first, is going to be, what is a vast thinker? So what is a vast thinker? And while you guys put your answers in, the people who got 100% on the homework number 2 of this week, it's day number 8, homework, it's going to be class number 8, these people get 5 raffle tickets. This was a little bit of a longer homework. I had a trick question in there, unlike the homework before this. So while you guys answer what is a vast thinker for a bonus raffle ticket, I'll be giving out tickets to Shax, Big Daddy, NHM, No Whammies, LL, Nikki, Dan C, Boosted, Imagine Ching, D Miles, Kika, Scrotus McDingle, The Dutch, Durham Dad, Candy Diet, Derelicts, TNT, Nick 2086, AceCom, Beer Drinker, JMEP, Agent Penguin, Lorgon 13, Ebon, and J Cal. So congratulations to all of you for getting 5 raffle tickets. And then we'll also be moving on to our question, which also is for 5 raffle tickets. And that is, what's the most important thing that you learned about yourself or trading psychology this week? But first, what is a vast thinker? So we have, let's see, as I get the text out. Alright, let's see. Boosted says, vast thinkers look at the big picture. Big Daddy says, one who sees the big picture more long term. A person who takes all things into consideration when trading. Yes, that's a good one too. Dan C. This is killing it today with these tickets. I like that one. Let's see. A vast thinker is someone who puts time and thought for a long-term investment. Someone who takes their time and looks at the big picture. Someone who takes their time in their thoughts and considers each element before making decisions. Okay, let's see. So we got Dan C. Josh, where was it? Josh Heimer. What's your Discord name? And Jacqueline, what's your Discord name? That's Josh. Joshua is Shushi. That's good to know. Alright, so the Gadget. Gadget gets some tickets. I just need Jacqueline's one. Let's go to the next set of questions. Some emotional traders are right here. Oh, these are actually, there's more people who got 100% on that one. That's going to be Investing New, Four Fingers, Shushi, Scrotus McDingle, J Malik, Casual Pete, LL, Nikki, Lexi, Kika, Laloff, Pier Man, The Dutch, AceCom, Ebon, and El Pato. Okay. And that's, oh, okay, that's, and speaking of checks, Lexi, that was you. So get you some tickets as well. Alright. So what's the most important thing that you've learned about yourself or trading psychology this week? And that's for 5 tickets. Shax says, I wasn't using the right approach of 25-25-50 in my plays during my long swings. My 25-25-50 was pretty quick while investing rather than waiting for a long time. This made me realize I had big FOMO, which eventually led to a lot of losses. I have learned that I'm more comfortable in swing plays because I'm patient over time and like to take time to research about the stock. Also, this past week of learning has helped me set up my trading plan for the coming month on how I want to approach my plays. So good job to Shax. Yes, the 25-25-50 for longer plays is important to be patient. You know, if that's something that you might not be patient, that's okay. That's some people just aren't patient. So then maybe you should take that into consideration when, I'm not saying you personally, just anyone in general should be taking that into consideration when making their trading plan and deciding, maybe I'm going to get into 2 long plays and the rest will be swing plays, and then my swing plays need to have volume in order for me to get into them. Otherwise, because stocks that don't have volume sometimes take longer to reach the target. So it's all good things to realize and recognize when making a trading plan. Nikki6186 says, I learned that when I begin to enter any trade, or especially when I see red, my heartbeat picks up a little bit. I feel anxious and my mind starts to think about the worst, or even the best. And God help anybody who tries to speak to me while I'm in the middle of one of these situations. I'm working on toning down the emotional aspect. I know it will always be an obstacle, but I hope to be able to recognize it and work to minimize it. And that's the key. You can't get rid of your emotions. Your emotions are just part of who you are. You are a human. You're going to have emotions, but it's important to know how to recognize it and then work to minimize it or to manage it. And she also was saying how when you enter a trade and it starts, the trade starts to go up or down, you get that anxious feeling, You try to think about what if it does this or what if it doesn't do this? And one way of neglecting or getting rid of that emotion or trying to manage that emotion is to have a clear-cut plan for taking profit and for setting a loss, and just follow it. And don't let your emotions determine what you're going to do. Just trade based off of your plan. Dan C says, this week I learned that I have a hard time with keeping a keeping a stop loss set and not moving it back down when I think the stock may go back up. I will move it up with the stock and be in the money, but when it starts coming back down again, I move it back down thinking it'll go back up, so I don't stop out. By doing this, I've lost money when I could have just taken the win, even though it would have not been very much. I think this is where I'm losing. I think this also comes from wanting to trade more throughout the day. With a cash account and limited funds, once the trade is complete for me, I have to wait 2 days for the funds to settle again. I can't trade the remaining part of the day. I also need to manage how much per trade I allow based on my total funds available, and this should help me trade more each day and not worry about not being able to trade that day. So it is important to diversify your portfolio as far as the percentage that you put into each play. You don't want to be putting too much in because then you're putting yourself at risk, putting your portfolio at risk. You can also set up a Webull margin and cash account. You can have both at the same time, so that way you have some money set aside just for day trading, and then others set aside just for swing trades. If you like, that's up to you. And yeah, like a big thing that people have trouble with is when stock's going down again. You set your stop, you have it already, and then it's about to hit the stop, and you take the stop away because you don't want to lose. It's a split-minute decision, and usually it's based off emotion, and that could be dangerous. Sometimes it's best just to stick to the plan. Sometimes you'll lose with the plan, but it's good to know what plan works and what doesn't. You can never figure out your plan if you keep changing it up, especially in the middle of a trade. So Shushi says, I learned that it is okay to take a loss. The first people who taught me about trading said to never ever sell something for a loss. Now I'm holding a couple pretty big bags that I at least now have a plan for working my way out of. And now I get into now I get it that it's still better to sell at a loss if you want to still hold the stocks, buy back in at the right time. Better to sell when you're down 10% and buy back in after the stock drops another 15% if there's no good reason not to. So you can always sell a stock and then buy back in later. So now instead of having, you took a 10% loss, but instead of having a 50% loss and just waiting for it to come back up again, you took the 10% loss, it went down a bunch more, and then you bought again. If it goes back up again, you can actually make money and make your loss back. And also, it's just important to trade based off of your plan and not always just hope that a stock will go back up and try to will it back up. You end up getting a bag. And I know a lot of people say, oh, you don't lose until you sell, but at the same time, you're not trading if you don't know when to set a loss or when to sell for a loss. That might work for investing, hold, but we're trading, we're not investing, we're not doing blue chips, and we're teaching y'all how to do, how to make some better percentages than people who are investing. So, next up is Boosted. Boosted says, trading with different emotions has such a huge impact on your plan. This is a key factor in why we should always try as best as possible to stick with our plan. One simple mistake can lead to catastrophic losses. There has to be a clear difference between modifying your trading plan and not trading per your plan. Starting the day with a clear conscience and not worry about yesterday's losses can lead to greater results. So it's good to just, to let, definitely learn from your mistakes, but don't linger on them. And as far as your plan goes, there's a difference between tweaking your plan and changing your plan and following your plan. You won't know if your plan works or not until you let it flourish. You let it, you test it out. And it takes some time in order to do that. You can't just have do 2 trades and be like, oh, this plan doesn't work. For all you know, the next 8 trades would have worked or would have been 80% successful. So it's important to stick to the plan, let the plan kind of flourish, and then learn from the plan. Take notes about what you did, what didn't work. And learn. Trading is all about learning. TNT says, as much as I would love to dabble in day trades and options, I feel that at this point it is best for me to stick to swing trading. With my job, I am much too busy at this time, but will definitely look at these plays when my job slows down. As a person, I'm patient but stubborn and a great multitasker. Both good and bad traits for trading. So it's like TNT was saying, it's very important to know what type of trading you based off your emotions or maybe even based off your schedule, you should or shouldn't be doing. So that's very important, very self-aware. And GMEP says, the basic I got out of this is to stop freaking out and to work on getting rid of my fear and stop looking for the big win and be happy with the little ones. The only issue is that my accounts are small, and that means to take an alert that is only going to move up 10 to 20 cents may not work for me because I can't buy 100 plus shares of the stock. That costs $12 to $25. So my plan includes that any alert that has to at least pay me back 50 cents or more. I may only be able to buy 10 or so stock. However, the thing that has helped me with this is that I might only make $5 on that trade, but at least it was a positive $5. So I'm still tweaking my plan, and more and more with every class I go through it. At least I'm moving in the right direction now and losing my bags by selling them and reinvesting them in something that is making money. So my account's growing. So yeah, that's very important, is to know that you might lose some money in one stock, but as long as if you stop out of it, or you get out of it at a good time, you can now use that money to make it back somewhere else. Like GMP was saying, how sometimes people with small accounts, it can be discouraging, but honestly, small plays still will add up. And I know a lot of people with small accounts who want to go all in, in order, because otherwise I'm not going to be making enough money to make it worth it. But by going all in, you can also lose all your money, and then you won't have anything, and then you can't trade at all. And the more you let your emotions, you let your portfolio size kind of affect how you trade, the more you're putting yourself at risk. And the more risk you have, the more chance you have of losing a lot of money. And then you want to always live to trade another day. And the reason why people do penny stocks isn't because you can buy a lot of shares. The reason why we do penny stocks is because they're volatile. Penny stocks is anything under $5. And so if you have $100, you can buy a stock that's worth $100 by one share. And if it goes up 10%, you're making $10. You can buy 1,000 shares of something that with $100, and if that stock goes up 10%, you're still making $10. It's all about the percentages. The reason why people do penny stocks is because they're more volatile. They might move 10, 15, 20% per day, whereas the high-paying stocks, like the $500 stocks, whatever, might only move 2% a day, 3% a day. So it's not about how many shares you can buy. It's about the percentages that the stocks move. That's how you make money. It's always important to keep that in mind. So if you guys have any questions, definitely be sure to ask. This is the Q&A part of our stream. I'll also be doing some more bonus questions. What does FOMO stand for, and what's one way of having FOMO in trading? So what's one emotion that you can feel that has to do with FOMO, and what does FOMO stand for? Make sure to include your Discord name. And if anyone has any questions about the homework, now is your chance to ask them. You can also, as always, ask them in the PBU chat. You can DM me. You can at any of the Penny Boys guides. They're very helpful as well. So D Miles says, fear of missing out. What's one emotion, D Miles, that you might end up feeling that, or you can feel, that has to do with FOMO? So for fear of missing out, yep. Boosted. When you see stock rising, you jump in right before it tanks. That is one way. Stubbornness, yep, 100% correct. That's kind of what the answer I was looking for. So, Daddy and HM, yeah. All right, next question is, what percentage should you set your stop loss? Actually, what percentage do you have to set your stop loss is the question. Greed is definitely another emotion you can feel that has to do with FOMO. Thank you, Dancy. And D Miles again. Whatever fits your plan. No one should ever tell you you have to set your stop loss percentage at this point. You have to do this, you have to do that. I mean, you don't have to do anything. No one really knows. Everyone trades differently. Like, just because one person's successful with a 7% stop loss doesn't mean that that's the way that you should trade, because there might be someone else out there who's successful with a 10% stop loss, and someone out there with a 12%, because they all trade differently. They all have different plans. You have to set your stop loss whenever it fits your plan. So it's not based off of a certain number. Someone can recommend to you 5 to 7% or 7 to 10%, depending on your risk tolerance. Here's the next question. When should you know what your stop loss is going to be, or what your percentage is going to be, and how much, and when should you know how much you're comfortable losing on that play, and how much you're going to be putting into that play? When should you figure this all out? So now we're not the what anymore, now we're doing the when. DNC boosted. Looks like everyone's saying it at the same time, so I'm going to give everyone tickets for that. Yeah, exactly. Before you enter a trade is when you should be knowing when your stop loss is going to be, what percentage is going to be at, how much you're going to be putting into that trade. All this stuff. You shouldn't be doing this randomly throughout the trade. You should know right before you enter the trade, or before you even enter the trade. That's part of making your trading plan. So we got value check, Lexi. Thought I had her up there right. There she is. And Janeo is new on the board. If I can spell your name right. And we'll do one more Scrooge McDingle. And T Miles was there too. How long has Penny Boys been around? I believe, what is it now? It's October, so almost around 10 months, honestly. I think officially it would be 9 months now. I was here since April. Let's see. Next question. So we have two more. When I said, this is I think two classes ago I said this. No, I think it was the last class actually. When I said you can be a bear in the stock market, you can be a bull in the stock market, but do not be a pig in the stock market. Which emotion was I referring to? So you might be a bear, you might be a bull, but don't be a pig. So bears mean that you're bearish on the stock market. You think that it's going to go down. Bullish means you're the opposite. Means you think you're just going to go up. But why not be a pig? Which emotions? Big Daddy says pig. The answer is correct. Scrooge McDingle. Greed. D Miles got that one too. Everyone's getting that one. Give it to the first three. So D Miles, Scrotus McDingle. Josh was Shushi. Alright. Last question. And the first three who get this. You should only trade with money that's you. Fill in the blank. You should only be trading with money that you. ... Top first three to answer this one. You should only be trading with money that you. What? Are comfortable losing? Yeah, because you can lose any kind of money. You can afford to lose. Yep, Spurs McDingle got it. Dan C and Big Daddy were the top three. You shouldn't be trading with your savings. You shouldn't be trading with your rent money. You shouldn't be trading with the money that you need for your groceries. You should be only trading with money, extra money that you can afford to lose. And if you don't have that, then paper trade it first. You don't want to be losing money that that you're not okay with losing. And then you get even more emotional because you just put your savings you just lost your savings in the stock market. And then you'll definitely be trading, wheeling stocks up and trading emotionally. Pierre says would spend at a strip club. That's great. Does anyone have any questions on trading psychology? Congratulations to everyone who got raffle tickets in the 100%. The top questions and the bonus raffle count. Dan C looks like you and D Miles tied for first with 5. Scrotus McDingle and Big Daddy. Actually, no, Big Daddy got second with 4. Wrote your name down there twice. So Big Daddy got 4. Big Daddy NHM. So Dan C, Dan C, and D Miles got 5 apiece. Big Daddy got 4. Scrotus McDingle got 3. Lexi and Boosie got 2. Janae Oshushi and the Gadget got 1. Congratulations. That was funny, Pierre. So next week, we'll be going over investing.com, Investopedia, other free sites you could use to help look up stuff in trading and just tools that you can use while you're trading, because it is important to have an arsenal behind you when you're getting into the stock market, and there's just so many things out there. We'll also be going over, for Wednesday's class, Webull and Robinhood. We'll just kind of be going over the pros and cons of each, how you can take advantage of some of the different features on each. We're doing a quiz then as well. I'll be putting tonight's quiz out as well later tonight. And we have week 6. We'll be doing floats, financials. We'll be looking up how to find halts and splits and what websites you can look that up on. But like they'll tell you when a stock halted or when a stock might be doing a split soon. Then we'll be making some trading plans the next 2 weeks. That's funny. Yeah, you did. I believe you did, Nick. You got one for one of the short answers. So, yeah, looks like there aren't any questions. So I hope that we see you next week in the next couple classes, so that together we can all make some bread. Congratulations to everybody who got raffle tickets. Take care, D Miles, Pierce, Boosted, Nikki, Dan C, Joshua. We have Jacqueline. We got Janeo, Nikki, Scrotus McDingle. It's always fun to say. And everybody else. Danny. Y'all have a... Oh, and